want to take a broader view on Pacific Rim EM. I want to avoid the idiosyncratic and talk much more about how I can make money or not lose money on EM currency. How do you structure that in the world of ADXY, the Pacific Rim ex-Japan?
Well, I think, again, we're at the vagary of this, what we talked about, the trade deal between the United States and China. You know, dollar renminbi, when it headed up last year from 635 nearly, we're talking about 10% tariffs. The currency goes nearly exactly 10%. And that caused a blowout, and there was no idiosyncratic, nothing, global stamps on local. And that's the problem we've got, that you might have the greatest local idea in the world, but if global stamps on local, it doesn't work. So your whole strategy regarding that must be about whether you believe that there will be a deal rather than an escalation, which is our view at HSBC. So it leaves us slightly constructive on some of those Asian currencies.
Well, slightly constructive. I mean, is it within EM, is it an 11 constructive, bigger EMs, more dominant, complex economies, or is there a surgical way to play EM?
There's no surgical way, because at the moment, you know, it's all about the Fed, where global beats local. That's your problem. Your problem is you can have the greatest local idea in the world, and if the Fed and Jerome Powell tomorrow, let's say, for example, is much more hawkish, you can just get blown out of the water. So the problem is when you've got macro themes like the Fed rates, when you've got macro themes like the trade situation, it blows your local view out of the water. So you've got to think macro.
Okay, give me a sense of, you have a great new note out there, David, basically looking at, you know, the FX and the trade wars and this new world order. If you bring it back to the Plaza Accord, which is kind of what you have here, you know, succinctly explained, what is the most common misunderstanding in the market? Well,
the understanding in 1985 was the problem was the same, and Japan this time was the person with this huge surplus. So they got together and they drove the dollar lower, thinking that's the solution. The problem at the moment is every time the U.S. administration puts on a tariff, the currency just moves to offset it. So now in the trade deals, there are currency clauses. There are currency clauses that you don't deliberately and willfully devalue your currency. So one with Mexico, one with Canada, then one possibly with the renminbi, one with Japan. And that'll change the way we think of currencies. You can't just willy-nilly go in there and intervene to make your currency and manipulate the dollar. The U.S. administration won't have it. And that changes the vista of how we think about currencies.
So that's less volatility.
It's less volatility, yes, in currencies, which it makes me as popular as you can believe on my FX floor. They want to hear why vol's going up and why the good old days are coming back. And I'm saying, well, they're not. And if you look at euro dollar over the last 24 hours, it's the most depressing thing you can see in FX markets. That just doesn't want to move. So how do you get together? You know, you can't do what Shinzo Abe did, which is come in, do QE, and your currency goes from 80 to 125 and think, whoa. You know, I've done it. I'm manipulating my currency in a sense. That you just can't get away with that anymore, the way the U.S. administration thinks. And that's going to change the way currencies behave.